Dun, 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 dun. Don't we love talking about taxes? We're so lucky. Yes, today's topic is tax planning, $40,000 tax break. Oh, yes. Yes, indeed. I am JB Bryan, President and Chief Investment Officer of JB Bryan Financial Group, the home of Afro Economics. I see you. I put the link up for anyone that wants to come into the studio, ask questions. Members, you are excited. You are excited. You are invited. I'm excited. You're invited to come into the studio and let's talk these tax changes. We got good news. Good news. Good news. And because I'm constantly always thinking about investments. That's what I do. I'm an investment advisor. But a big part of my client help is if you are fortunate enough, and I thank God for my love for taxes and the whole strategy. And, undergrad, I did a double major because I just developed this fascination with accounting and taxation. And I also did finance. And there was no one else in my graduating class that did a double major with accounting and finance because those were the hardest ones in the business school. So if you know me, you know that I'm always going after the challenge. Thank God. And I still have that in me. Mr. Jefferson, I still got the fight in me. I want to know it. I want to know it all. And I want to give it all to you. And I want to share it all with you. I want my life to be poured, my knowledge to be poured upon you. What's the use in living if you don't share what God blesses you with to someone else? That's my purpose. There's scripture on that too. That just leave it all here. Can't take it with us. I love the fact that we have this tool that allows me to record these because this is opportunity that when I start talking about these things, you'll have it recorded here. You can come back and listen. We'll have it cataloged in the pages and the pages and the pages in the Afro Economics YouTube channel, for example. There's like over 1,000. It might be close to 2,000 now because I've started doing these shorts. But there's over 1,000 long, full-length videos on financial empowerment. My free membership is called No Excuse because I don't want to give us an excuse for not getting the financial empowerment that we need. I was looking at this podcast and it was on there. It was talking about, making money and making money and making money and making money. Hey, we are very good at making money. This is about keeping the money and what you do with the money when you get it. But you'll see, like, my approach, being a regulated and licensed professional, is more about your wealth and your empowerment and not about just talking, because they're watching every word I say. I am fully regulated. So when I give out this information here, it's generic. It's for everybody, anybody that can listen. When you find yourself listening to something and it tells you this is what you should do, they're not licensed. If they don't know you, how in the world could I tell you what you should do? So be aware. The word says a fool and his money shall soon part. Don't be foolish. Let's be wise. So much politics gets involved in everything. So when we get these new laws that come out, The negativity tries to tell us, Miss King, Mr. Barber, Mr. Jefferson, the negativity tries to tell us, Miss Hayes, that don't get the facts, just turn your back on it. Don't worry about it. When this new one big, beautiful bill is probably one of the most impactful things that will ever happen to my client database. And I thank God that we have always been on top of it about our taxes. I talk a lot about that. It's so important. It's cool to make money, but it's just even cooler. It is just like the coolest thing you can ever do is learn how to keep your money and make it grow. And that's what we do here. This is about keeping the money, keeping your money. So when this big, this big, beautiful bill that basically locked in a whole bunch of the changes that were made back in 2017. So through the previous administration, we were still doing the tax brackets and laws of the original Trump administration. So it was kept where we had been blessed with some lower tax brackets. So this big, beautiful bill said we're going to lock in those lower tax brackets, those tax adjustments. And I'm telling you all, there are so many benefits for middle and low income in these tax changes, especially for seniors, that I should have done this on July 5th because some of them start this year. We need some good news. So the good news is that we'll talk about the ones that start this year, and I also will talk about the ones that start next year. I would love for Karen, Vicky, Mr. Barber, Mr. Jefferson, for you all to come in, click that link. I'll hit it one more time. So you can, I won't tell your business. You don't have to tell your business. Just ask questions, because it's so more. To me, it's so much more empowering when people are able to see a real life person ask me a real life question. Right, Miss Lovett? ask me a question. So you can type the question in as well, Miss Anderson. I know you ain't coming in the studio. I don't know what I would do to get you in the studio. That would go down in history if I got you in here on camera. But so let's go. Let us move forward with these tax changes, things that I want you to realize that are effective right now. Let's start with my $40,000. I got your attention with that, right? $40,000. $40,000 change. Yes. State and local tax deductions provides a federal deduction for any taxes that you pay on income. Any taxes that you pay on mortgage income. So mortgage interest. So on the mortgage interest, no, and actually also on the taxes. Let's just focus on just the taxes, the mortgage taxes. This is where it's going to feel. This is where you're going to feel. This is where you're going to feel it. The interest is really okay. We'll look at that as well, and interest on vehicles. But state and local tax deductions now has a new cap of $40,000. State and local taxes, where before, if you itemized, you would only be able to write off up to $10,000 in state, your property taxes, and that's where it connects to the mortgage. So even if your house is paid for, you have to pay the taxes. Oh, but I'm glad you're here. You're never late. Yes, indeed. You still have to pay taxes on properties that are paid for. So I have clients that they've paid for their home, but their escrow, or the part that they still have to pay, but in many cases, the person's payment might be $800, but their escrow amount is over $1,000 a month because of that state local taxes that they have to pay. So that now has a new cap of $40,000 if your income is under a $500,000. That's pretty good. If you're married filing separately, a lot of this new code is going to ding you. You're not going to be able to take advantage of some things because of married filing separately. So you really have to think about it. Is married filing separately really going to, is this the Dr. Light, you should join Afro Economics so you can see the light. Come and see the light. There's no mention of an age restriction on that state and local tax deduction. So, great question. And I'd be happy to help you more on that when you join Afro Economics, even as a free member. No excuse. The free membership is called No Excuses. So it increased from, it used to be just $10,000. So that's the 40,000. That's how I pulled you in, because you're like, what's up with that? What's up with that? So where it depends on like where you live. If you live somewhere where the taxes is so high, the taxes are in a high area, like, say Miami, Florida, New York. Depending on where you live, taxes can really be a problem. So when they were maxing it at $10,000, that didn't help a person that had, a really nice property and had to pay taxes on that. So this increase to $40,000 is definitely something for you to look into. But of course, there is an income cap. But a lot of times you'll look at the media, you'll get all caught up in it, and they'll say, oh, these things only benefit rich people. It's just crazy. It's crazy. It's crazy. And I thank God for forcing me to look past the obvious and read for us. We're going to be empowered. We're going to be rich. We're going to be wealthy. We're going to be wise. And we're going to look at everything and see what God has in it for us. So now, one thing that does have an age part to it is this new bonus for senior citizens. If you're 65 years or older, you get an additional $6,000 off of your taxable income. Yes, and there's an income cap on that as well. If the modified adjusted gross income is over 75,000 single, 150,000 joint filers, then they may not get that 6,000. And that's part of the push to try to get Social Security to be tax-free. So since that couldn't get through Congress, this $6,000 is allowed. And the most beautiful thing about it, because the majority of us do a standard deduction, they don't itemize. So even if you do the standard deduction and you don't itemize, then the reason you wouldn't itemize is because the standard deduction is higher than the things that you would itemize. And a really, really good tip to know is that when you go into these places and you pay people, Ms. Deloach, turn on your camera for me, and you pay people to do your taxes, you really need to have an understanding. You really, as Afro Economics members, you have so many advantages by having a relationship with me that loves and enjoys your taxes, but I have zero interest in doing it. I'll show you how to do your own, or I encourage you to go there, but don't just sign off on the taxes assuming these people who just did 90 days of training know what they're doing. Some of them less than that. Not a tax preparers are just data entry, and all due respect to them. but they're data entry, so they're not going to see where, whoa, both of them are 65 and this thing didn't get, that's $12,000. They should have that. They're sitting there talking about they have a liability. That's how I help my clients. That's what I find out. And then we go and say, get them to make that correction. But what they want you to do is go in there, sign off on the error. Then when we find the mistake, they don't want to do the amendment. And I find that over and over and over with tax preparers who will go, I don't have time to do the amendment. So next time they tell you you can't take time to review it before you sign off, then you tell them, well, I don't have time to pay you for an amendment. So you're going to let me look at a draft of this and show my financial advisor. I mean, we literally have to like hide from them that I'm editing it for them. It's crazy. It's really sad. Not one tax preparer has reached out to me to ask, like, Jay, hey, that's a great, I'll offer your members a discount. So when I realize, then people will say that we're not getting ahead, it's because we're not working together. So I send these referrals out because I don't do it. But they don't think they ever should have to send a referral back? Or would you just prefer to have a client? Because there is no way the majority of people do not utilize every brain that God has brought into their life. Why we think it's okay to skip over the blessings that God has given us, I just do not know. Allow me to help you. I'm not going to be here all the time. But the time that I'm here is just amazing to me when I see, like, I mean, you just see this stuff on television. You see, like, simple things. And it's like they're going to jail over something that I would have caught in a second. Like, you can't do that. At least they would have known that they were wrong. Like, Ms. Mosby in Maryland. And she said, well, my tax preparer told me that I could do that. Nobody told her. And she's a lawyer. So we can't assume because of what we do that we know this. Yes. IRS is going to my client and they're going to the preparer. If that preparer signs off on it, they're going to them too. And a lot of times the IRS has a star or some sort of note on a particular tax preparer that's doing stupid things, like giving everybody the exact same charity deduction, making up deductions, and they see they did 3,000, the other person came in, they did 3,000, the other person came in, they did 3,000, and they've connected that preparer to that. They get a problem. So a lot of times I have clients who the tax preparer will say, well, I don't want to put your business income on here because it'll draw attention. That's so we're legally required to report all of our income. We're legally required. So if you're legally required to report all of your income, you go to a tax preparer and they tell you you don't put that income on there because it's just a hobby. It's just a hobby. Who's wrong? You're wrong. And you need to go get another tax preparer, because if you're accepting income, that's a business and you have expenses associated with that. This new big, beautiful bill actually has incentives in there for small businesses. So if the majority of us aren't doing the Schedule C for your business, you're not getting the new tax deduction for small business owners either. There's also, from a business perspective, the 1099s are not required until it's over $20,000. Now, make sure you verify all of this, but this is effective immediately. From what I'm seeing, that the businesses are not going to have to give you the 1099 unless you have made from them over 200 transactions and $20,000 from them. So some of the income you're going to have to make sure you report because they're not going to give you the 1099s. You have to report, but you still have the responsibility of reporting that income and recognizing the expenses associated with creating that income. How you doing, Ms. Moore? Greetings right back at you. You're welcome, Dr. Light. Yes, indeed. So, definitely those also, what about this one? So when think about look out for that 1099 that you might not be getting as many of them this year. And then also from tips, tips, your tip income. Your tip income can be eliminated up to like $25,000. I want to make sure that I find that detail. So the tip deduction, no tax on tips. So the income eligible for the no tax on tip deduction caps at 25,000. Higher income workers may only be able to claim a partial deduction if the benefit begins to phase out based on their modified adjusted gross income. 150,000 single people, married 300,000. So if the person is doing the tips and they want to be able to write it all off, but they don't get it, they don't, and not count, they don't want to count it if their regular W-2 income is over the 300 married or 150, then they may not get that full benefit of that tax, the tips. They may end up paying taxes on some of those tips. And the deduction for no tax on tips is not available for people that are married filing separately. So remember, there it hits again. It also, in this big, beautiful bill, they talk a lot about must have a valid Social Security number. Must have, like, if you want to be able to not count the tips have to be on the W-2 from that restaurant saying 25,000 was tips, 50,000 was base salary. Yes, I don't know what else you could really use other than, bank statements. That would be better than anything. Bank statements, credit card statements, as long as it has the details that can prove that it was, Office Max or wherever you bought the office supplies from. But if you were audited, I would feel that would be enough, but definitely talk to your tax preparer or call the IRS and make sure. If you're afraid that, if you've been audited before, or you're not sure if you really know, if you were questioned about it, what that bill was for, because you got to know your stuff. You got to know what your business expenses are. Use only one particular credit card for your business purchases, right? Herb Italia knows. He knows everything. Indeed. Good to see you, Twyla. Yes, indeed. So but when in doubt, go directly to the IRS and ask them. Don't ask me. Don't ask, like if you ask me and we don't know, I'm going directly to them. I'm going to stay on hold during our meeting. I have like, I know, look, I have really helped clients take on the IRS without giving their money away to these services that aren't doing anything. Because the most important thing is for you to understand what's going on. But these other ones, they want to charge you $10,000. They want you to give them the paperwork and they, just want you to go away, And I realized that, you know what I'm saying? What benefits my client benefits me. Now they're coming from a different perspective because their thing is just about, charging you for what my thing is about, keeping your money in your pocket, keeping your money invested, keeping your money growing, so they're different. You got to look at like what perspective this person's coming from. Herb said he was audited and agents were more lenient. Yeah. Some things that were accepted, some were challenged. Exactly. And they're human beings and they really respect when you talk to them. They really respect when they talk to them. Like the remember that, like Ms. Deloach, like, will tell you, like, when we have solved an issue, they had made a mistake. And she actually about to write out that check. I said, whoa, whoa, whoa. Let's talk to them. And it took patience. It's scary, isn't it? It's scary.
It
But
is.
she was right. But she was right. And I was just used to verbalize how her correctness. Because a lot of times we don't know what to say. We don't know what to say. But a lot of times we're I see it all the time. And I admire you for that, Ms. Deloach, because you don't know how many times people have said to me, don't even worry about it, JB. I'm just gonna pay them. But next time, that's so sad. It's so sad. It's just so sad. Think about all the things that we can do with the money that we pay in error. It's just crazy. I just one lady, she sent in $16,000 in error because they would not allow her to recognize her business income. So that meant she could not write off her business expenses for the year that she created the business. She was so embarrassed by me standing up for her that she never talked to me again. And she had a doctorate. It was embarrassing. I was like, but we have to realize it doesn't matter. Even as I finished my PhD, that don't mean I know everything, at all. You know what I'm saying? We know what we know, but let those who know what they know, help us. It's so humbling. I realize it because we've just been convinced by this system that if we know this, then we know that. No, we don't know that. I have absolutely no. I have no. I mean, down to it doesn't even make any sense. We just know there's not a person on the planet that knows everything. And if God blesses you with somebody that knows something you don't know, humble yourself and get the information. I remember one time this homeless man, I was on my motorcycle, and this homeless man started talking to me, and we started talking. And guess what he told me, Mr. Loach? That he used to clean motorcycles. That's what he did. That's what he did before he developed his habit or whatever. He was like telling me how to clean my bike, how to make it shine, all this stuff. If I had not respected that man, you know what I'm saying, that he knows something I don't know, I wouldn't have learned that. But yeah, like they just want to talk to you. And then you don't have that extra fee. You can't, I'm not gonna charge you for that. So you get to keep all of it. Or one time I found an error, $15,000 error. And my clients got back 15,000. Send it right to them. You know what I'm saying? If they had talked to somebody else about it, they would have had, you know what I mean, to at least share half of that. You know what I'm saying? I just said, hey, like, oh, this is wrong. They did this wrong. I've even caught W-2s that are wrong or 1099s that are wrong. One time, major company like Philip Morris sent a client a 1099 saying that he was not over 55. Like, you know what I'm saying? And I was like, this is wrong. This should not be coded this way. And that was a major company that did all of their work. And we called in, the client was like, what? I said, this is wrong. And I just thank God for it. I even had a client who her whole pension calculation was done wrong. Mr. Lowe's, they told her, this is your lump sum offer. That was when they were doing like you get a lump sum or you get this. Thank God. I caught that error and they had to do everybody's over.
Right. And what I learned,
That
you
was
can't
Bell Atlantic.
always
That was
assume.
Bell Atlantic.
Yeah, you can't always assume everything is right.
Yeah, I said
Because
this
it's
is
not.
not right. Like, and when she was a cancer, she was dealing with cancer and everything, and she has always told me. She said, "Jay, if you hadn't found that error, she said I took that extra money and I bought a car with power steering because my car was so hard. She didn't have power. And that's something, I'll bring tears to my eyes. She passed on, but she used to, I love seeing her ride around with her power. You know what I'm saying? It's the little things. But it was like $50,000 off. And I don't even know exactly why it just did not. I had seen it, and I was only in my 20s then. Like, you know what I mean? And I had seen so many already at that point that I knew hers was off. Especially because so many people were coming from that job that they were downsizing. And I said, why is hers? And I'm telling you, there's some craziness, you know, and we're allowing ourselves to be out there by ourselves. And that's why I say, like, don't just sign off. As I think Dr. Light or Herb were saying, when you sign, that's yours. You're responsible. It doesn't matter who did it. You're responsible ultimately. Like, they might get in trouble, but not to pay your bill. You know what I'm saying? They're gonna tell them, well, you did so, da 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 da, whatever. They're gonna get them. But you still got to do what you signed off on, that this is true, da da da. And then they made up numbers you didn't ask. And so, like, and you didn't even ask them to do that, but you still signed off. Even like you saw, like Joe Biden's son had huge IRS problems, huge. His thank God his dad, he would have probably got jail time for that. His dad signed off on that, pardoned him. He was making up numbers. They were like, it's like fictitious. It's like just year after year, just making up numbers. This is with the do no more with less staffing. Yes, there will be a lot more errors. Well, look, this is a huge part of this big, beautiful bill. They have made the 1040 easy. The majority of Americans, not just my members, the majority of Americans take the standard deduction. You can still get your $6,000 as a senior with the standard deduction. You can still do lots of these benefits with the standard deduction. The standard deduction is increased under this new bill. So you're getting, you know, even a higher standard deduction with your new tax return. So will be more and more people doing the standard deduction. There is absolutely no way most people should not be going to a tax preparer. That is just what in the world? We should be going in irs.gov, free tax return, click there and do it. If you are a member of Afro Economics, I can review it before you send it in. You know, I'm sure it probably lets you log in, set up an account, you can save it, you know, but it's so easy. Do this, it is. You know, you don't have this, you know, interest you're trying to deduct. You know that you don't have a whole bunch of property taxes, and you know, okay, your standard deduction is $30-something thousand. It's these things that would be itemized. We can look at, like, you know, and your itemized totals up to 20,000. Why are you paying a tax preparer to do that Schedule A? And you're doing the standard deduct. That's the scary part, isn't it? They will still charge you. And you're not even doing, because you came in and said, yes, I own a home. You said, yes, I own a home. But they blatantly can see you ain't pay that much interest. Your interest on your house was $10,000. So you got $10,000 here. You didn't have no medical expenses that you could write off. You didn't do a whole bunch of charitable deductions. You didn't do, you know what I'm saying? So, you know, when you go through what can be itemized, that's what we have to think through. You don't have to do that. Or you go in there and you tell them the 1040 EZ, they do it for free. Because they're going to get paid by the government for doing your return for free. And if they don't do it for free and they charge you, but if they charge, see, how you go in there, they know how to make money. You gonna say something like that, I own my house. So that takes you out of free mode because you got to itemize. You know what I mean? Itemizing is not free. So you have to know that yes, I do own the house, but all of my itemized things are not enough to take me over my item. This standard deduction is so high. So yeah, I do that, but you gotta be smart. You gotta tell them yes, but they're not, do not exceed that amount. Well, you should let us do it anyway. That's what they're gonna do, because they're in the business of making money. You go, no, you have to do that. That just cost me another $100, $50, whatever. You gotta know. You gotta know. Ignorance is expensive. That's what costs us. We can look at all of the taxes that our community pays unnecessarily just because of lack of knowledge. Now you do your own. Fantastic. That's all it's designed. Look. But now when you do your own, okay, and you go in and you try to use TurboTax, that's who I use. I'm telling people for years, use TurboTax. It's a setup. They trying to give your credit information. You gotta know how to say no. Correct, Mr. Loach. You gotta know, because they're at, here you go, bling. We would like to send your information to credit card. Bling. We got so and so. Bling. Would you like to talk to get help? You already got me. You don't need to pay them $150 more to get, and every time I let a client go ahead and set up the TurboTax, and then, I'll look it over. They already are charging them too much. Most of the time, they would have qualified for a free one, and you got to start all over to get to the free mode. They won't take you. They will not, Miss Hayes. They will not save your information. They make you start all over. So you have to know at the beginning that no, say no. So no, do you want that? No. Send almost every other page. They had mine up to like $300. I was like, this is a simple return. No. This is crazy. And I just put my foot down. So I was like, I'm gonna figure this out. Why in the world? Yes. And they have more advertising. Yes, they have more than ever before. Next thing you know, you're getting loan offers and interest rate offers and this and that. Another one. Mr. Deloach, it's time for you to get your new Benz. Girl, interest. I had just told someone, I said, you don't want to pay no interest on no car. Don't be paying no interest. So guess what? They know that. They know people getting smart. So now you can buy a new car this year. It's got to be brand new. It's got to be made in the U.S. You can buy a new car, Ms. Hayes. No interest for at least while Trump is in the White House. No interest, like, because some of these things like end in like 2028. I think the $6,000 for seniors might end in 2028 also. Yeah, do that paper return if you have to, but it's great if you can go online, right to the irs.gov, click free return, do the free return, boom, boom, boom. But look, this is what I was going to say. But if you do gambling, stuff like that, you're going to have to pay, because that is not a simple return. So if you go to a casino, they send you that W whatever, you're going to be in trouble, because you got to do an extensive return to report. I don't know if that comes up under, it's just a different return, because I was trying to do that. I was like, why is this doing this to you? And it was like, it's not a W. You can't, it's a W whatever. Let's say it's like a W11 that you get from the casino. You have to do you going to pay extra to report that what you made, those winnings from that casino?
What about a $25 scratch ticket?
Exactly.
Unfortunately, it's one
Only
place
the good thing
maintenance
about that is
high.
they don't. But if you go in there, oh, did they ask you? Did they?
Yeah,
They
I had
did.
to
They asked you.
sign. I'm like, oh no.
They asked you your. What is a W9?
No, they just asked me to sign the
So you
ticket.
don't know what's. Oh, but it didn't ask for your social and not like that.
No,
You
no.
might be all right. You might be all right because they have no way of sending you that form. But when you go in the casino and you know, anytime you fill out that W-9, you gonna get a
Oh,
tax.
okay.
You know what I'm saying? You gonna get
Hmm.
something because
Okay.
you filled out like, and people get all excited. And I was like, oh yeah. You better give them the right address, and you better give them it's a W-2G. Goodness, what you know about that, Miss Hayes? W2 W2 G for gambling. I'll probably never forget that now. Yes, that one is on. If your winnings exceed 1200,
Oh,
I think Miss Hayes know a little bit too much detail. Miss
I'm
Hayes,
happy.
I'm just glad that you won enough to get the W2G. Exactly. Don't be messing around. Then but yeah, you gotta, that will take those little things like that will take you out of free return mode. They gonna get you. They go, oh, you got money to go out there gambling. You ain't getting no free return. Exactly. Right. So the limits for income on, oh, but check this out. 75 for the RMD. Required minimum distribution has been increased to 75 years old. I knew it was coming. I knew it was coming. So that means that now it's 73. So it means that, my clients can delay taking the withdrawals, you know what I mean, until they're 75, but it won't start till next year. And somehow it kind of catches up with the person. Like at 3, they might get 1 year off. You know what I mean? They might get one year off. Like if they're 73 now, the next year to be 74. They won't be required to take that withdrawal. I hope her about that. I hope you got a W2G before. I mean, is it? Yeah, G. That's right. So 75, so that means we can save more and more for longer. You don't have to touch your money. We can work forever. Lucky us. Yeah, Mr. Butler, that TurboTax is something else. And I mean, literally, they should pay me. They should have paid me for how many clients I sent to TurboTax. Now I feel like I'm giving them to the wolves. Like, no, we're doing a movement. We're going to the IRS.gov until they tell you make too much money and they send you away. But try them first. IRS, do the free return first. Mm, mm, mm. Exactly. And I don't believe that stocks are a gamble. I believe that, stocks based on historical performance, future expectations, at least we have something to base our opinion on. But I think that does have something to do because of the nature of my work. It does have something to do with why I have zero interest in gambling. Zero. Like I have stayed. Mr. Lowe, did I tell you about that time I stayed at the MGM all week for a conference? I walked right past the game. I mean, I have zero interest. But the last time I went to Vegas, I was at Four Seasons. Walked right past. I didn't even. They said, "Oh yeah, the casino's back here, Miss Bryant." Zoom. Zero interest. I was up there doing my schoolwork. I don't know, Mr. Butler. I don't know. Something about it. Yeah, yeah. That's how, like. But I guess it's just enough. We get it from, the investments. And then especially, I believe you're an entrepreneur, like our life is a gamble. I think, because according to research, women are the most likely to become, especially women of color, to become addicted to gambling. Isn't that something? That is something. So I don't know. I don't even think they have gambling in Georgia. But I know they got gambling all over Louisiana, right?
Yeah,
That's what they do. They got the boats and all
that's
that.
right. Cause yeah, casinos everywhere.
Y'all started it. I bet y'all mad because so many places out here have it now that we don't have to
Yeah,
go.
Texas have them now too.
Did you see what the news? Texas is on the news today. Did you see that?
Yeah, I saw that.
I'm praying for them. We gotta keep it together. I haven't been to MGM yet. Yeah, that's a beautiful. Like one I stayed at it had the lion in the middle. Like in Maryland, I don't think they have the lion, but the one I stayed at in Vegas, it had that huge lion in the pen in the middle, and that's something like you could walk right by it. That was the I don't know. You said New Jersey burnt you out. Exactly. Yeah. So then like let's look at it. So remember the 1099? People aren't going to be giving you those unless it's over 20,000 unless they want to. They can, but even if you don't get a 1099, you still have to report the income. To have the child tax credit has increased to 2,200. That's up from 2,000, I believe. And it'll be adjusted for inflation. The credit increased from 2,000 to 2,200 per child. All right, the dependent care, other dependent care credit made permanent. So there were things that were in that previous 2017 bill that were floating out there. They've made permanent. Like maybe in a couple of years they'll make permanent that 6,000 to seniors. But between here and like 2018, they are or 2019 or 2030. That whenever it's going to, you're going to have inflation adjustments for these figures that are temporary. But the families and dependents who do not qualify for the child tax credit, such as parents or adult relatives, may qualify for other dependent credit. The new bill, the value of the credit is $500, and it has been made credit for other dependents. So not the child tax credit, but if you have another dependent that you are providing for, as such as an adult child, then the $500 is now permanent. Adoption credits, now up to 5,000 of the adoption tax credit can be even refunded. So that means that before, you could only up to the amount that you owed in a tax liability for adoptions, but now you can actually get you can get a refund for the adoption. So hopefully that'll help more people be able to adopt. Indeed. And then so remember that state and local the taxes, that's up to 40,000 from what used to be 10,000. And there's some that start in 2026. So in 2026, you have what's called a Trump Child Savings Account. So in the Trump Child Savings Account, you can contribute up to 5,000 each tax year. I think that feedback is from Wida, who's not at her desk. Let me see. Yeah, because I muted it and it went out. No, I still hear it. I don't know what. Do you hear that kind of like something moving? Yeah.
Yeah.
I don't know what's doing that. It's all your fault, Wida. Sit down and don't move till I tell you. But this is a very important topic, Ms. Davis. I know you're doing things. But
yeah, I'm trying to come into the room, but it kind of won't let me. I'm using my hotspot instead of my friend's internet because I don't know what her password is. So it's going like very, very slowly.
But check this out. Employer contribution to student loans, effective 2026. This allows employers to help pay student loans. It has been made permanent. So employers can provide up to $5,250 for payment of principal and interest on an employee's education loans. That's so good. Look, it's good to know because my employer is going to pay for my PhD. Exactly. look, now we know that the IRS has no problem with that. Exactly. Oh, I'm so glad, Mr. Butler, that you got it in there. Ms. Lee, make sure that you're on my database. Go to the and then click. And when you first go in, I think the first thing it asks is about you getting on my calendar, you getting in my database so that you get invited to everything. Exactly. So remember, that could be a serious benefit for people with student loans to get a job that will help you pay your student loan off. Isn't that something? So mortgage interest, okay. The limit in 2017 on mortgage interest deduction for home purchase debt is now permanent. The threshold will continue to be 750,000. 300. So the mortgage interest premiums known as PMI associated with the acquisition of the mortgage can now be treated as mortgage interest. So do you understand what I was saying? It's saying that the PMI that you pay upon getting your mortgage loan, and now can be paid as counted as mortgage interest. So, and then interest on home equity loans are excluded from the definition of qualified residence interest, and therefore continues to be non-deductible. Did y'all know that? I did not know that. I didn't know that home equity loans were not tax deductible. It says it continues to be non-tax deductible. Did you know that?
But on the part of the PMI, if you have this standard deduction of 40,000, sometimes you have it, but you really don't see, because you can't take advantage of it because it all falls into that 40,000.
Well, that's on that 40,000. That's just on the taxes.
Standard, yeah, on the standard deduction, yeah.
So
that was a question. I'm sorry. It sounded like I was.
Oh yeah.
It's like sometimes you have deduction. Like you give to charity. Maybe you give 20,000, but
okay, here it is. You can deduct the interest paid on a mortgage of up to 750,000 or 375 if you're single. If you're married filing separately. So if you're married filing separately, it's 375,000. This limit applies to mortgages taken out on or after 2017. For mortgages before that date, they still have the $1 million limit. So that's another reason why refinancing can hurt a person. Because the old mortgage, did you hear what I was saying? Like the old mortgage gets the tax benefit of writing off a bigger loan. So the maximum loan interest is 750,000, or a single person 350. But it's not really saying that. But I know that's what it is saying. Whoa. You can claim the mortgage interest if you choose to itemize your tax deductions. But that 40,000, that's just for taxes. So you can write off more interest than that. That would be a hell of a loan, right? But there's probably definitely people, especially when the loan is new, if their mortgage was like 10,000 a month, goodness. But if their mortgage was 10,000, no, that wouldn't work, because their mortgage couldn't be, because the mortgage you can only deduct the interest of up to 375,000 or 750,000 if married. 375 if married filing separately. But it's just not saying single, but generally that married filing separately is going to be the single. But I know Sherry's like, what in the world? But we need to realize that the home equity does not have the tax benefit as that original mortgage. I'm really shocked that they still allow you to write off mortgage interest. I'm shocked. Because there's billions, that's basically subsidized housing by allowing us to write off the interest on a mortgage. And there's more money that's given away by the government to allow people to write off mortgage interest than it is with subsidized housing. I tell you, it takes more. It's just that they never got that money. So the government counts what they pull out and pay, but they're not counting what they're losing by letting people write off that mortgage interest. Am I making sense? It's costing more, but people won't admit it because that's an average person that's taking advantage of it. So average person will be like, y'all need to help people out until it's going to cost them something to do it. So if the government said, well, you know what? If we stop letting you write off interest on your house, we can actually provide more affordable housing. People would shut up. They'd be like, well, I ain't say all that. And that's, y'all are bad. They go, well, I didn't say all that. I didn't say that. I was going to do it. I just want y'all to do it. Where it's got to come from somewhere. And those e-vehicles, this is the last year of those tax credits for these electronic vehicles. And now the tax credits are, as long as it's U.S. made, the interest can be tax deductible. And you don't have to itemize to get that interest on the car. So you can do the standard deduction and write off your new car interest. I'm okay with the subsidy because I do it's not. No, because the SNAP, I don't know. The average SNAP is like less than probably $100 a month. And then so if a person's getting to write off their interest dollar for dollar, come on. You buying and building wealth and getting a tax benefit for doing it. And that's because most of the loan, because the government is making so much money off the loan. But it's losing probably more money than with the money it gains from, because he's not even letting you write off the interest. Most people, so basically what it's saying is the only interest now can be written off is on a loan that would fit within the government loan requirement. Because when you're talking about $1 million and over, those are conventional loans. That's not going to be government backed. You get streets, you get a whole bunch of stuff from the government. You get all these services from the government. You guys think is a way of buying people's vote? Yeah, definitely. Because if you did that, if they changed that, and they make a lot of money off people buying homes off those government loans. They make a lot of money from that. So, I don't know. It's just like it's taking the money, then it takes the money, then it lets you write off the money that you're paying them in the interest. But they still got the money because you still had to make the payment. They're not doing the loan industry. So I guess they're like, half the people don't even do their taxes right. But then if the person's doing this, the majority of people do the standard deduction, even with the house. So they would like, that's why a home mortgage interest is not the best tax deduction. It's a tax deduction if the person itemizes, but if the standard deduction is so high that people should not be buying home, doing a mortgage for the tax deduction. And people use that as a selling point. And I think that's a weak selling point because you can reduce your taxes more theoretically. And there's arguments and research to back this. You could just do the retirement plan at work. You reduce your income more dollar for dollar pre-tax. If you're doing the pre-tax contribution, you max that out and rent somewhere really small, one space, and invest the difference. Like, there's research that shows they came out ahead. Yeah. You gotta have, like a lot in order for the itemizing to really benefit you, because you can do the retirement and your standard deduction still benefits you because it's all done pre-tax. So you could do that, but it's to itemize, you have to have the charity and all these other things to help it go over these new high standard deductions, I'm arguing. But of course, some people having a mortgage, especially if they have a big family, having the mortgage is requirement. It's the only way to make housing affordable for them. They got 4 kids. Where you gonna live? No, but for a person is just like in our community, we have a lot of people, one in a house, 3,000 square foot. No, so that person, they have a lot of other options. They're like, yeah, whatever, keep in my house. But these are some key things, and we'll continue to talk about it. But I want you to realize that effective 2025, the reconciliation legislation, HR 1, also known as One Big Beautiful Bill, that it makes many of the changes that were done in 2017 permanent. When we talked about those, it also brings in these new things, bigger standard deductions. The seniors get the $6,000 credit for 65 and older, so you get the higher state and local taxes that if you itemize, you can write them off, especially if you live in an expensive state. There are so many, the interest is now deductible on new USA based, USA made. So it didn't have to all be made in the US. So you know how Toyota has some plants in the US. So that they have specifics that satisfy that. They can still count that as US made because maybe they had to put it together in the US. So you will be able to write off the interest on that. But very important to check if you're buying a new car, does this satisfy the criteria for a USA made vehicle? Even if it's a Ford, it might not be made in the USA. I hope it is though. Oh, thank you. Thank you, Miss Hayes. Good stuff. Back to you and Mr. Butler. Thank you. Yes. I appreciate y'all. So let's continue to research. I apologize for any errors that may have been made. Check on me. But my intention was to give you as much data as you could. And it's all available at the irs.gov website. Look at Big Beautiful Bill, tax changes, tax law changes, tax law improvements. How does it affect me at such and such an age? How can I maximize these things? Join Afro Economics. I hope that each week we're empowering each other. We're growing together. We're teaching each other. I learn as much from you all as I hope that you learn from me. I learn a lot and it helps me. So I'll see you again next week. I'll see members on Friday morning, 9 a.m. Love y'all. Be blessed.
All right.
Love you.
Thank you, Ms. Wilkerson. Yeah,
Thank you for the information.
thank you.
Always.
Mr. Roach. Thank you. I appreciate y'all so much. Y'all the best. Look at 2 beautiful women sharing their beautiful faces with me. What else can I ask for? Got everything. Look at us. Afro Economics all the way live. Y'all be blessed. Stay protected.
You'll be best.
Stay prayed up.
Yes.
Bye-bye.
Amen. Bye-bye.
I'm here.